A very good morning to everyone. This is Doug Campbell with Right Way Options. In your morning market preparation video for December 18th, 2018. Well. Huge whipsaw. I don't think anyone probably expected a whipsaw quite like this, a daily whipsaw traveling so many points. But there it is. We've experienced it, and they are possible. So what do we do from here? Well, I don't think anyone would have expected the bulls to rage back like they did. This really turned into a tremendous short squeeze. Anyone that got short here was forced to buy to cover, pushing that market higher. Just squeezed those short traders right out of the market. And in an amazing display of strength by the buyers. Now, I received all kinds of messages yesterday, email and in the trading room from folks, asking questions like why or how. And the truth is, the simple matter is there's more buyers than sellers. That's it. The buyers are overwhelming the sellers in a tremendous number. And so we're getting these kind of responses. Now, we're making history here. There's no doubt about it. The market gapping up, continuing to run, showing no signs of any real fear in the market. We are making history. Dow, for the first time, closed over 26,000 yesterday, and common sense would think, well, we're going to see a little pullback today, and we might, but futures are currently a bit mixed, but they have been positive. And remember, we have a bunch of earnings coming out that could definitely move the market. So when we take a look at earnings, we've got a bunch of the banks still reporting. Banks like KeyBank and Morgan Stanley and PacWest, they'll all be reporting this morning. We have companies like J.B. Hunt and trucking, which has been doing extremely well, reporting this morning as well. And then this afternoon we have American Express and IBM. And, just a slew of companies out here. And I don't think anyone is expecting them to do poorly. So even though the market seems just incredibly stretched, we have to remember that jobless claims are low. Interest rates are low. Manufacturing is growing. Real wages are increasing. There's all kinds of reasons for this market to remain bullish. And if the earnings continue to support these levels, there's no reason to believe we can't still go higher. So what does that mean? Does that mean we should just throw caution to the wind and just pile into the market, get completely complacent that there's never going to be a sell-off? Of course not. I'm going to be extremely cautious, to tell you the truth. When I see rampant bullishness like this, I want to stay long the market. I want to stay with the trend. But I have to tell you, I start being a little bit quicker on pulling the trigger on profits. I want to be faster at protecting myself in a market like this. And I want to stay laser focused to price action. If this price starts giving us clues of failure or weakness, I want to be on top of that quick and protecting my gains, protecting my account. We don't want to become complacent, because complacency in a market, in a move like this, in a run like this, can be very, very dangerous. You can wipe out returns very quickly. And so we have to watch that closely. Now, let's keep in mind we still have, the looming potential government closure. It looks like they may have got it worked out where they may have the votes to get it done, so the government doesn't close on Friday at midnight. But that's still spinning out there, and we could get some news on that could move the market positively or negatively. So kind of keep an eye on that as well. On the economic calendar, we have several major items this morning. We have housing starts. Housing starts are expected to slow just a tiny little bit, but still are showing incredible strength. Permits also maybe just a tiny little drawback, but still showing incredible strength. Jobless claims have been coming in good. They're expected to, jobless claims are expected to decline just a little bit this week. And the Philly Fed is just raging. The business outlook is ragingly strong. Back orders are starting to build. They're getting new orders faster than they can be filled. And that is expected to stay very, very strong today. And then we have what's going to be the most important report to me today is the petroleum status report. That's been trending that supplies are slowly declining, as a cold winter stretches across the country and continues to move across the country here. Demand for heating oil and fuel supplies and things seem to be growing, and that's reducing our supplies, holding up oil prices, and that's important, obviously, to any of us holding positions in this amazing rally that's going on in oil stocks right now. After that, we have just a bunch of bond announcements. We have some, reports that aren't expected to move the market, and then we have a Fed speaker after 6 p.m. Eastern today to be aware of. So, taking a look at the price charts, setting new record highs in the diamonds, closing above 26,000. The SPY closed at a new record high. The Qs also closing new record high close. And IWM lagged just slightly behind, but certainly recovered substantially from the sell-off on Wednesday. So now where do we go from here? Well, futures are staying relatively positive, and we've got all of these earnings to come in that could easily continue to propel us higher. I don't think too many people are expecting really bad earnings out of companies right now. And then we had the news out of Apple yesterday. They're going to repatriate a tremendous amount of money and add about $350 billion to the U.S. economy here. And of course, and that's due to the tax bill where they can, repatriate money for the first time because of the lowered corporate tax structure that was passed. They're bringing lots and lots of money back, and they're planning to put it to work. So as companies continue to show that kind of strength and willingness to invest and grow, anything is possible. So stay with the trend until the trend fails. It doesn't have to make sense. Remember, the market is just simply buyers and sellers. Are there more buyers than there are sellers? Clearly, the buyers are overwhelming sellers right now at a tremendous pace. Let's take a quick look at the VIX. The VIX, even in this amazing rally yesterday, showed a little bit of rally itself. So there may be a little bit of fear starting to grow here that we are overextended, at least in the short term on this market. And that fear seems to be rising here just a little bit. Will that continue? I can't tell you that, but we want to be watchful. What I will tell you is what's going to be important to me, this long-term downtrend that's been going on here in the VIX, until we break through that long-term downtrend and prove that we're going to stay above that, we hold that as support, that's when trouble really will come into the market. I don't know when that might be, and I'm not going to predict that it's going to happen in the imminent future, just simply because the last thing I want to do is stand in front of a stampede of bulls. So I'm not going to predict when that's going to occur. I just am going to trade the price action I see and stay with the market that is showing us all kinds of bullishness at the moment. Let's take a look at T21.22. T21.22, the 4-week new high low ratio. Notice that even with that big move yesterday, we are still not up here in the place where we would suggest, a bearish reversal is imminent. We are approaching that level, but right now there's still more room to the upside. So if earnings keep rolling in good, notice this trend here. If earnings keep rolling in good, there's no reason to believe why we can't keep moving higher. So keep that in mind. Having said that, I keep mentioning moving higher, moving higher, moving higher. Please remember, you have to stay very, very focused to this price action. I'm expecting more volatility as we continue to push against these new highs. And that means more back and forth, more big swings. So you're going to have to be prepared and be very watchful of price. Pick and choose your battles carefully. Do not chase in this market. You chase a stock that's already well within its run and we get a reversal, you're going to get punished big time for that. So be very, very careful. Everyone, I want to wish you a fantastic day. I wish you great profits. And if this is the first time, please do me a favor. Click that subscribe button on YouTube, the follow me button on Facebook. Poke those thumbs up buttons and drop a comment. I really appreciate that. And everyone, just have a great, great day. We'll talk to you all bright and early tomorrow morning, and it'll be Friday. Friday, we all like Friday. Everyone take care. Talk to you all soon.